Mpact has had a tough first half. The packaging manufacturer has posted a 29% fall in profit during the period. That's due to subdued demand and lower selling prices. A dividend of 30 cents per share has been declared. Looking ahead, Mpact says should demand pick up notably, the second half of the year could be better. But even if orders increase, it may not be enough to fully offset the declines the company suffered in the first half. Telkom has had a strong first quarter. That's as the mobile operator's earnings were boosted by its next generation revenue streams. Group earnings before interest, tax, depreciation and amortization rose 24% during the period, with next generation revenue up 7%. For the full year, EBITDA is expected to moderate as a result of a higher base from the second quarter onwards. Uganda's economy is growing and this has helped MTN. The mobile operator's business in the East African nation has reported a near 30% jump in profit after tax for the first half. That was supported by a 20% rise in revenue. The firm's customer base grew over 14% year on year to 20.7 million. Copper 360 has started underground mining operations at its Riedberg mine in the Northern Cape. Production has started with a target for the first month of 12,000 tons. This will be increased over 4 months to 45,000 tons. The commissioning of the group's second modular flotation plant will support the ramp-up. Commenting on the development, CEO Jan Nelson says the start of mining activity is exciting and is the culmination of several years of planning. South African private sector activity remains subdued in July. The S&P Global Purchasing Managers Index for the country rose slightly to 49.3 during the month. That's from 49.2 previously. The reading has come in below the 50 level mark, which signals growth for 2 consecutive months. Weaker sales and increased supply-side pressures have weighed on the index. In international news, sources have confirmed that the Biden administration plans on banning Chinese software in self-driving vehicles. This is its latest move in its tussle with the world's second largest economy. Let's take a look at this package report for more.
The US is expected to propose barring Chinese software in autonomous vehicles in the coming weeks. That's according to sources briefed on the matter. They say the Biden administration plans to propose a rule that would bar Chinese software in vehicles in the US with so-called Level 3 automation and above. This would also ban autonomous vehicles produced by Chinese companies testing on US roads. These sources added that the administration also plans to ban cars with advanced wireless communication abilities developed by China. A Commerce Department spokesperson said on Sunday that it is, quote, concerned about the national security risks associated with connected technologies in connected vehicles. This includes worries that the connected cars could use the technology to listen into or record conversations, or take control of the vehicle itself. Under the proposal, first reported on by Reuters, the sources say automakers and suppliers would need to submit verifications, confirming none of their connected vehicles or advanced software was developed in a, quote, foreign entity of concern like China.
And according to a UN report, global food prices eased in July. A welcome relief for consumers. Let's cross to Darling Lachela and the DW team for further insight.
That's right, Zinati. But while grain prices have fallen to the lowest levels in nearly 4 years, the drought in Eastern Europe and geopolitical tensions could affect global maize supply. And joining me with more of the detail is DW correspondent Chiponda Chimbelu. Thanks for your time, Chip. Now let's get straight into it. Just tell us more about the drought in Europe.
Thanks for having me. Well, it has been a very hot and dry summer in parts of Eastern Europe. In Ukraine, which is one of the world's most important corn exporters, temperatures reached 38 degrees Celsius last month. And in neighboring Romania, the EU's biggest corn producer, the situation isn't better either. Now, the ongoing drought in Romania has affected crops on more than 2 million hectares cultivated with corn and sunflower. Experts say that the corn harvest could be 20 to 30% lower than was expected this year. And the decline in corn production could mean that the EU will have to import more maize from other regions. But the effect on global prices isn't expected to be significant just yet.
So then how much of a concern is the drought at the moment?
The drought is more of a concern for EU countries that import grain from Ukraine and Romania in particular. Now, they may experience higher prices not just for corn, but also animal feed, which of course requires corn. But the situation is different from in Eastern Europe, of course, which many silos there are still filled with grain. Farmers in the region have been holding on to their produce when prices were falling after the EU opened its borders to tariff-free Ukrainian grain imports in a show of solidarity after the Kremlin blocked Ukraine's Black Sea ports. For instance, Poland imported more than 2 million tons of maize from Ukraine last year. Now, that is up from just more than 6,000 tons of maize in 2021. So many Polish farmers were hoarding their harvests last year, hoping to benefit from higher prices later. So despite the decline in this year's harvest, there's still enough corn in Europe. However, there's still concern about food security. There is no guarantee that Russia will continue allowing grain exports from Ukraine, Romania, and Bulgaria through the Black Sea.
Lastly, what effect is all of this having on global food prices, Chip?
We have seen a shift in terms of where the maize is coming from on the global market already. More than twice as much corn was delivered from the US to the EU in the first 6 weeks of the business year than in the entire 2023-2024 season. But the European market could have a negative impact on the global one. A Russian blockade or an escalation of the conflict between Russia and Ukraine would force EU buyers to turn to other markets. And that could in turn affect global grain prices. And that is, of course, not the only concern. Climate change, geopolitical tensions, and conflict are all making food security more vulnerable. The ongoing conflict in the Middle East and geopolitical tensions could also have repercussions for shipping. And of course, another drought in the Panama Canal would disrupt global shipping routes.
Let's leave it there, Chiponda. Thanks for those insights. That was Chiponda Chimbelu joining us from Berlin. It's back to Zinati now with your markets update.